What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ARKK for ARK ETF. I believe this is the technology one, innovation ETF. I apologize for that. So regardless, this is Kathy Wood's fund. If we take a look at the daily time frame chart, it's already been marked up. This is something that I just have on the back burner, kind of watching it in the corner of my eye. Falling out of this range. I mean, abundantly clear on today's session, everything was down across the broad market, at least, the SPY, the QQQ, the tech stocks really hurting as well today. And that obviously took a toll on her, ETF here. So all things considered, we're coming into a known area of support. You'll notice that this was the fake breakdown low, obviously rebounded into the range, went to the top end on the look below and fail, as we typically sort of talk about on the channel. So nice to see that playing out in the past. Regardless, what are we watching for going forward? Well, I would certainly point out that we are at a critical area of support. Looking left as well, a bit of a pivot, make pretend with me on this little pullback here. That's what led to that rally in there. So 108 is fairly important. 107, treat this as a zone. It's not going to hold to the penny here, noting how volatile the the tech sector really is. So all things considered, be on the lookout for the possibility of a bit of a dead cat bounce. And by dead cat, I simply mean just a little bit of a bounce here. It's not something that would break us all the way back up to that 126, but a little bit of lift would be in store. And that's kind of what we saw into the end of the day here. Again, you can see that this is what I would classify as a dead cat bounce. So did it already happen? I'm not entirely sure. Maybe the daily candle could give us a bit of a pause here before ultimately deciding on the next direction. But I would have to agree with anyone in saying that this is bearish price action, right? If we look at that daily bar, zooming in a bit there, I mean, the bears owned it from the high down to the low. They were in control the entire time. You can see it sliding off nearly the entire day before a little bit of reprieve and selling into the close a little bit more on a, very, very large volume bar there. Obviously, they do a lot of transactions at the open and the close, so that might have something to do with it. Regardless, going to give us a couple of clean levels to pay attention to. 110.54 is your upside gatekeeper. Let's see how that compares to a 38.2 from the Fibonacci perspective, coming in from the high of the day down to the low of the day. And your 38.2 is below that, but look at that. It's nearly the exact halfback. It is the exact halfback of the entire day's range. So that is noteworthy that on any sort of rebounds, look and expect for that to act as strong resistance. Now, anything that consolidates down here, I would just look at it as bearish consolidation. Doesn't necessarily have to be under the 38.2. We're always going to opt for structure, right? So this is essentially going to turn into some sort of massive bear flag. Any breakdowns underneath that 107-ish area we just discussed lead to lower. And again, it could pause. It could put in a daily candle. Let's go ahead and just draw it in as sort of forecasting, right? It could put in a resting doji, could even put in a hammer candle, could put in a fat body doji, right? The structure could look like anything, but as long as it's a bear flag consolidating underneath that 110.50, that's obviously bearish, right? It would be sort of the exact mirror image of what happened here. Big breakdown, another bear flag. Does it break down again? That's what we have to be on the lookout for. And 107 is kind of that breakdown point. So searching for a downside target together, really we don't have much other than this cluster of lows down here at and around 100, the nice psychological number. So to me, that makes for a perfect target if we were to see further and continuation breakdown. Now on the upside, what are we looking at? Well, quite simply put, the breakout over 110.50 brings you back to the bottom end of the range where I would imagine we do see strong resistance. Now, why do we see strong resistance there? Because anyone who's still long from this section of the chart as they were potentially accumulating shares is now overhead supply. If they're going to get out for break even, that's the first place where we start to see them sell their position for either a loss or break even if they were a god of a trader and getting in right at the lower portion of the channel. So expect 114, 113, 115-ish area to start to act as strong resistance if there's any sort of breakout. But based on the chart right now, we are looking for some downside continuation inside of ARK. That's really going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.